see it now? Whoa.
Yes, I can see it.
You can see it okay?
Yes.
Back it up. Okay, there we go. Okay. And again, on the little clip you saw, that a lot of people can buy a lot of things, and they may be buying a lot of things and looking like they're making a profit, but it's on paper, and they're not watching the cash come through, right? Because how can they make a profit on paper and still not have cash coming through? How can it look like they're making a profit, even though they're spending their cash? Anybody got a clue? Because of what? Yes! Because when you purchase your long-term assets, right, you've tied up your money, you've taken your cash, whoop, and bought something. So the cash is not there to use for operations. But as you're doing your income statement, what do we do to reduce, to show expenses that are not really coming out of cash right then? Depreciation. So you see they've spent the cash, right? It's not there for them to use for operations, but on the income statement, right, when you go through your income statement, you're showing profit and loss. We're taking out depreciation expense for all those big items, right? And so it's making it look like we're making a profit. It's an on paper profit, right? And for tax purposes, it reduces the tax liability. However, it's not cash because we spent the cash. Make sense? So this is how some of these, this is what he was talking about, some of these companies get in trouble because they're purchasing assets and stuff. And
so even when like you figure the ratio of assets and liabilities, it could show that
that's where you'd catch it.
Yeah.
Okay. Your ratios that we did the last time, you would catch it, right? If somebody was really paying attention, which they would be if they were going to loan money to this company, right? They would go in and do the asset test or the liquidity ratio, and they would find it. They would catch it. But just to the owner, he's not aware, and he's thinking, "Oh, I'm making money," you know. Then all of a sudden, he has not enough cash to continue purchasing his inventory or continuing his operations. So that's another reason for the ratios and staying on top of it, right? Analyzing your statements, seeing what's going on. Yeah.
I bet it happens more often than we like to believe.
Yes, it does.
I mean, I've seen good companies go down.
Good companies go down. 70% of small businesses fail because they are not doing proper accounting and don't have any idea of how to do the accounting administration of their business, and so they fail.
Wow.
Either for not paying their taxes or not staying on top of keeping up with everything, or they run out of cash and they don't know why. Does the do what?
Not paying taxes is
Yes, it is.
I got a statement
I got several. I can give you some people I know personally that are,
from the state one month that they estimated my taxes, and I would love to have this company that they use to estimate taxes on.
Right, but it wasn't.
My estimated tax was $4,300.
My gosh.
They said that they estimated that on average businesses. Now, I would love to know what average computer business in the state of Arkansas, because this was the state
Small
of
business,
Arkansas,
right.
makes that much that they're paying $4,300 a month in taxes.
Yeah. Something wrong with
I'd
that.
like to be on the small end of that.
Well, yeah, right. That's true. Okay, so back on. So our statement of cash flows turned out to be a pretty important statement. It is reviewed by the creditors. They're going to look at it to determine how they're going to, and again, use their ratios. They're going to look at it to see, are these, okay, yes, if we do give them credit or loan them money, will they be able to pay pay the bill each month? So, very important. And also, people investing, what about investing? invest or buy that preferred stock or in that company if they look like they're not going to. See, it's an important statement to see if are they going to be able to pay us the dividends? Are they staying on top of their cash flow? All right. And management, very important for management to stay on top of this. One of the film clips we watched was for Accounting 1 was one of the owners was talking a lot about the cash flow statement, how he uses it more than anything now to really stay on top of what's happening in his business. Anyway, management must be sure that the cash is coming in, right? And remember, somebody mentioned this the last class or one of the last classes about that's the reason for them offering the 2% discount if you pay right. Remember that? We talked about that in that to get the money coming in quicker. That's one of the reasons for that. Encouragement, an initiative to get them to pay quicker because we need that money coming in. All right. Okay, and the sources and the uses, the cash flow. Sources of our cash. Okay, where are we going to get it? Cash has got to come in. Operations, right? This is what? Revenue and expenses, basically? Kind of. However, this will include a lot of other things that are not expenses, like having to pay off those loans. Any long-term debt or debts there, right? Okay. So, we got inflows of cash. And we got cash coming in from operations, running the business. We may have investing activities. This for most small businesses is not a big area of income, right? They got to have their cash to operate, so they're not doing a lot of investing on the side getting income coming in. But some of them do. Some of them make a lot of money moving funds around from one into money market accounts or whatever, savings accounts, whatever. Not savings anymore. You're not going to make any money at that, but in money market accounts and try to keep it in ones that are at least making them money, right? Risky, but why? But if you got somebody good at it, could make money doing that, right? Financing activities, we finance some for others and charge interest. Where are we going to get some of this? Well, we'll look at it in a minute. Okay. Sources of cash comes from, of course, our sales, right, or services that we provide. But if we're selling merchandise, we also have to buy it. Our cost of goods sold here. And if we're selling it, we have to pay for the merchandise before we sell it, right? So the money's got to be there to buy the merchandise first, and then we sell it. And then, do we get cash instantly when we sell it? Okay, so here comes our accounts receivable. And do accounts receivable always pay? Not all of them, and on a timely manner? Maybe not. So the timing of all this, and most of them do pay. But I worked for an oil company for years, and for an oil service company who serviced the big guys like Exxon and Mobil and did completion services. What they do is go in and complete the well once they drilled for these big companies. They went in and did the completing. That was their job. All these big companies don't do it. They drill, but then they have other little service companies coming in doing different parts of the job. And that little company that was doing these, the completion, that was doing the completing of these wells, of course they want these big accounts, right? Because it's a big job for them. However, Exxon didn't pay for 120 days, period. Didn't pay. That's when you got your money, 120 days later. And why could they do that? Because we had to have the business, right? So what we had to do is realize that, we just got to wait that long for our money. Didn't do any good time. Well, they had to have money up front. The investors had to put in the money to get, to stay ahead of the, knowing that it's coming in later, just gonna get there. Money's gonna come in. But there's your cash flow problem right there, big one.
But wouldn't banks loan on that?
Great big one in a company like that, right? Because that's a big expense.
Banks would loan on that.
Sure. Yeah, the banks would loan on it. And if you've had accounting too, you learned that we sell those accounts receivables to the banks and get our money. But then again, we don't get the full amount right, and they make a profit off it too. However, you can't do that. So there it is. Boy, a bunch of stuff on. Look, think of all that stuff we have to think about. We got to be sure that money's coming in. Yeah.
You could be like Obama.
No. We got to sell our service. We can sell our services right. And attached to that, of course, would be paying the taxes on it that's due. Or we might have interest income from financing. Probably not a big source of income. Remember, it falls down there under the other income on our statements, below operating. But we still have to pay salaries and wages, like you said. You still got to pay your people, right? They got to get their money and got to pay for whatever it is you have to take out for it. Dividend income. We may be getting dividends from companies we have invested in. That's from investment activities. But we have to pay interest expense on the stuff that we have financed. And we may have miscellaneous income. This would be from the sale of equipment we no longer need, whatever. Things like that. That's not a very big category either. But any other expenses we incur, we still have to pay for our expenses. And believe me, our employees want to be paid, right? And then the things that we have financed, we have to stay on top of that. That's where Exxon. Okay. And Exxon,
Spend money that's not there.
just, spend it. Other sources, of course, sell things. Yeah. Land, buildings, equipment, whatever. And then we need to upgrade or pay for more equipment and land. Of course, we have to pay for that. So there's just different things that are sources. We may have put out receivables or allowed them to pay on long-term. We may have sold larger items rather than just our accounts receivable. It would be a long-term receivable to receive. We've sold something big. Doesn't happen very often either. And then of course, we have to pay for the purchase of investments. We may want to invest in bonds in order to get the money from them. So many things to look at. So many things. We may issue some more common stock. That's another source of income if we're incorporated. We can say we need more to generate more cash. We could authorize more common stock. However, if you're a corporation, then who has to agree on authorizing the stock? The stockholders. So you'd have to sell them on that because that's going to reduce their total percentage of the business. All right, paying dividends have to be paid. Preferred stock, again, still got to pay the dividends on them. We may issue a bond, but we have to repay the bond too. So look at all these things. We may have to borrow money, short-term loan, but we got to pay it back. So there's ways of generating the cash to come into your business, but on the other side, it's